Welcome to DMBI.com. This is John. This report is for the 19th of August. And the other day I think there was just a lot of confusion for the market. They didn't know how to react to the whole Trump-Zelensky summit with the European leaders. And there was a lot of talking, but nobody's really sure if anything happened or took place, or was it just a photo op? Who knows? But is it better that people are talking? Probably than complaining about this, that, and the other. Absolutely. But at the same time, everyone's still waiting to see what the Fed is going to do, which is interesting because they've been absent for pretty much the entire period of Trump's presidency at this particular stage. But the readings have been, modest. I mean, we're still relatively near the highs, so that's not exactly a significant decline in any way, shape, or form. Things are just sort of blah humming along, and as long as that exists, you get a little bit of softness here. Magenta almost breaking below the 25. That would be key for potentially moving towards the 76%. You didn't get much of a rejection on the DOC spread, so it just went pretty much straight across. And when that happens, you just don't have an impetus to drive things lower, and we already knew that because MBI White was already fading. So just a lack of buyer interest at this particular stage. The Nasdaq was the weaker one of the two, and expressing itself as such. But still, you're in positive shakeout territory. It's not really diminishing histogram-wise or anything significant. It is closer to the 76%, but then again, you can look at the squeeze that's taking place within the Morganacci lines now. When that does squeeze tight enough, though, you will get an expansion out of it, and the question then becomes, will it be a breakout to the upside or down? And most likely to the upside, simply because we'll have reset by then. It's straightforward to follow it that way. From a Treasury standpoint, again, the odds of the Fed cutting keep going back and forth. You've got Jackson Hole happening. We'll see if they have anything to say. But I think that the chairman is just waiting out his time, and he's going to fade off into the sunset and do nothing. It's the easiest approach. He's going to be under a lot of pressure, though, from some of the others. And my position is that from the Fed standpoint, the longer they can leave rates where they are, the better off they're at. From their balance sheet standpoint, things aren't in a horrible condition economically. So if you leave it as it is, it's just an opportunity for them to collect a bigger spread to reduce how upside down they are. So it's a more practical theory than some people want to hear. They think that there's some other ulterior dynamic, but the reality is, you've had this huge bloated balance sheet you've got to do something with, and rolling over treasuries at new amounts is exactly how you do it. And to make up for those losses they had from before, the zero rates when they were buying up everything at 1% or whatever, now you're looking at getting them much more significant yield in that purchase return. So it's a chance to make up some of it. But oil still holding, and again, there's the potential for that breakthrough. That's the upside danger, which would be a drop in oil prices if you reach some agreement with Russia that includes sanction relief, as well as tariff adjustment to countries that buy Russian oil. That would change the dynamic quite a bit, and certainly be a driver for the economy. I mean, that's in Trump's interest overall. Eurozone, of course, didn't like the fact that European leaders were in the U.S., and anytime they have to, suggest that the U.S. has more power, it just drives them nuts. And so the euro was sold slightly. It's still going to face broader weaknesses. Germany's recession is not going to stop, and it's just only going to exacerbate itself across most of the EU. And then what are you going to do when you see the huge number differences between GDP growth of the U.S. economy versus the euro? And it's like, does it make any sense to have euros at that stage? Probably not so much. Gold just, ebbing in the softness. The same with crypto. There's no real excitement now because, all your factors to drive things. Of course, everyone's going to be looking at the next set of budget realities and how much the deficit's going to grow on the big, beautiful bill relative to where it was. We'll see. That's going to be your most significant material impact. I think this is just your normal trade back and forth, easy at this particular stage. We had the MBI White spike that led to the brief sell-off there. You're filling in positive extremes, more so from an ETH standpoint than a Bitcoin. It had a lot more excess in the bubble, so there's a little more room to get back up. And this is pretty much what we expected from the MBI weight spike from the other day. It'll move towards the 0%. And we got that and pretty much stayed fairly weak. And even now, we're still under the 25. So, excuse me, just not a lot of excitement pushing anything anywhere. And I think the intraday really reflected that that's just nonsense. It's just option plays trying to find any little teeny edge they can get. And there's just nothing. There's no real driver at this particular stage. So we'll continue to see if anything develops in a broader sense. But overall, you just got a lot of people who really just don't know a direction to move. And you can see from the Asian section here into the early European session starting to get a little bit of buyback. But nothing was really decided in any way, shape, or form. So that just leaves everyone sort of like, huh? So we'll take that for now and just wait and follow the readings. That's all we can do. As always, have a good one. Trade well. Anything relevant, I'll put it on our team chat.